you just have to survive. You have to, you stay in the arena. You got to stay in the game.
You can't check out.
So that's defensive.
And it goes. He's loving this.
He's so
because you're setting up my point. You're sitting defensive, and I'm on the attack. What he wants
to say is how to be proactive, how to not be on the defensive, how to stay in the game, how to
stay in the game, how to win the game.
Welcome to Stop Whining About Real Estate. Join us as we chat, sip, banter, and wine with the best in the biz. Grab a glass of your favorite vino, sit back, relax, and let's wine together.
Afternoon, everybody. This is Emmanuel St, Germain, your host of Stop Whining About Real Estate. I've got my co-host, Sarah Biernbaum, here, and we've got a special guest today, Mr. Kirk Todd, or as I call him, Dad. Welcome to the show, Pops.
Thank you. Thank you.
So everyone is in here, and so we're in the office, and my dad, Kirk, is visiting from Maine, and everyone is saying, "Oh, you guys look so much alike," and it's unbelievable. But for clarification, we don't have any biology together. My biological father, passed away when I was young, and Kirk raised me from 8 years old on. So thank you for being 9 years old.
Yeah.
There you go. Well,
it's kind of magical how much you guys look alike. I think the first time I ever saw you was in a picture that you posted on social media, and you guys were even sitting the same, and your body language was the same. And I was like, oh my goodness. And I knew that he wasn't your biological dad, but I was like, oh wow, talk about somebody that you grow up with, and you kind of just learn their mannerisms and the way that they are, and you kind of mimic it, and it is a match. And then I was like, his dad's actually a lot cuter than him. I'm sorry.
Little nurture versus nature, our debate here.
I keep hearing this over and over. And this guy, he's got such a big ego. Could you imagine if he actually was my biological kid?
Oh, my God, could you imagine?
Could you imagine?
Wow. No, I think my athleticism worked out better this way. But all right, so enough about me. Let's talk a little bit about you.
Sure.
So let's start with the mortgage industry. When did you get into the mortgage industry? When did you start?
Well, it started a long time ago, actually. I went to business school, got out of school, went to work for a regional Northeast builder that actually had, this was back in the mid-'80s, and we actually had our own financing arm because back then interest rates were 15, 16%.
Hear that, everybody?
So by managing the
Was it hard to sell rates at 15, 16%?
Well, it was hard, but of course, houses only cost $100,000 back then too.
That's the difference.
That's the difference. So it's easy to tell people today, "Come on, the rate's only 6 or 7%," but you have to tell them the rest of the story.
Right.
So we set up our own financing company, or I didn't, but the owner of the company, a guy named David Kroll, who I work with today, very successful mortgage lender. We set up our own financing so we could control our clients. Because back in those days, we were building 200, 300, 400 houses a year.
Oh, wow.
So to get the financing was a big piece of the puzzle. Get the financing for your client. You can convert them.
So this is regular construction financing.
Construction finance. We would
one-time close or two-time close?
Yeah, two-time closing. We actually hired a guy from Fannie Mae that was our rep to come and start. It was called Maine Capital Corporation. And it was an arm of Maine Post and Beam, this custom building company. And we did the takeout financing, the permanent financing. We would do that just like you guys do right today on a construction deal. And then we had regional banks that would provide the construction end of it. And
so you were working with different regional banks all along?
Regional banks in different areas. Like we had an office in Springfield, Massachusetts. We had a regional bank there.
So one thing that's a little bit different, Sarah, up in New England, they deal with a lot more local banks that will lend, and credit unions and local banks that will lend within a certain proximity of the bank itself, much more than we have down here.
Right.
Oh, got it. So it's like hyper local.
It's very, very local. Yeah, we don't have as much of that down here.
But it was also the time too.
I was going to say, is it still like that
40 years
up there?
ago. This was 40 years ago when the secondary market was kind of in its infancy. Fannie Mae and Freddie Mac were kind of in its infancy.
Got it. So whoever was lending was also servicing.
Yeah. You went to the bank for your mortgage. You went to Bank of New England. All these banks are out of business. Bank of New England, or I can't even remember half the names, but they were where you get your financing. We had an office in Pennsylvania that I actually went on to run at one point at all of 23 years old.
Wow.
We built houses. We designed them, built them, and financed them. And we had a bank there called Bank of Pennsylvania in Potsdam, Pennsylvania.
I actually know where that is.
There you go. So they actually would do they did our construction financing.
Okay.
And I remember whenever I needed on Fridays, it was all, the company was growing quickly, so it was all about cash flow. So I remember it was on Wednesday or Thursday, I get a call. We need money on these houses. We need X amount of dollars collected. So I'd call up Ken, I forget his last name now, the banker at Bank of Pennsylvania, and Ken, why don't you come on down? We'll have some lunch. And we'd go around to some of the houses, and he goes, "Yeah, that's coming along pretty good."
You're like, yeah, I need more
cut
money.
us a check.
So, do you know construction lending, like they work in phases?
Yeah.
Yes.
Okay, gotcha. All right. So
Yeah,
in
so
general,
everything
yes.
is
So
done
what
on-
he's talking about simply means, hey, come look at the different phases.
That's right.
We need more
The
funding
house
to
has
continue the
gone
next
from phase 1 to phase 2, so now give us a draw is what.
But it was done
the
a lot on
terminology they use
trust. I
now.
mean, he would say to me, "What's framing and sheathing?" And I'm like, "Okay." I guess
Wow.
he doesn't really know what
You're
construction
like, how
lending
much
is
do
all
we
about.
really need?
Yeah.
Let me buffer a little more. All right, this
All right,
is what it costs.
so we did that, and then when did that turn into Mortgage Network? Because that's the bulk of your career.
Yeah. So anyway, so we went. We did that construction financing.
We're only at 1988
I know,
right
I
now.
know,
So
I know.
if
At least
I'm now-
at
at
this
least I'm now
pace,
born.
How much time
at
do we
this
have here?
pace, we're going to run out of time. So yes.
Okay, so anyway, the economy was crappy in the late 80s, recession. The company I worked for went out of business. And so I joined Mortgage Network in 1991. And at that time, it was a small company, 6-7 people employed out of Danvers, Massachusetts.
So 91 for perspective puts me in 8th grade then, which means we were, right? We were living
like
in
that.
York River Farms.
No, probably just after that. Well, right
After
around
that.
that time, yeah.
Okay.
So I joined Mortgage Network, and it was literally one of the owners was my childhood friend, Al. He started the company, my best friend since 5 years old, and his brother-in-law. They
Okay.
married sisters. So
Al's
that's it.
mom was my home ec teacher.
Oh, boy.
So here, by the way, so like York,
Small
Maine,
town.
like this small town.
I love
so,
it.
So sidebar, you want to know something funny?
Here we go. I knew there was going to be something in here.
We're going to have lots of hometown revelations here. So Kirk, his dad, and myself, all three of us share the same accolade from
Actually,
York High School.
Ask her what it could possibly be.
Well, she's going to guess best athlete, I would guess.
Is it going to be the spelling bee? Because I know you were good at the spelling
No, I
bee.
did. I won the
I don't
spelling
really
bee and the
know that,
geography
but-
bee. But no, we all got best dressed.
Oh, wow.
Isn't that
dressed.
funny?
I mean,
So-
I look at you guys and you guys look great.
I was early 90, so 96 is when I graduated. You graduated 80,
79.
79, and then when'd your dad graduate?
Let's see, 51.
So 51, 79, 96.
Best dressed.
Best dress. Yes, isn't that funny?
It is funny.
But I picked out the
Seriously,
shoes.
in the yearbook,
Yeah.
it's true.
You should bring that in.
I'd have to find my
I'm
yearbook.
sure your mom has it.
No,
We have his,
I didn't have that type
His
of.
modeling pictures. I don't know if you've seen
Oh,
them.
I've seen them.
The ones that's
Actually, the guy that modeled with him is my stepson by marriage.
So
Brian.
my buddy Brian
okay.
married a woman so Kirk married a woman after my mom
Okay.
married a woman
complicated.
who had a daughter.
Okay.
My buddy Brian married her.
Got it. Okay.
Yes.
Yeah.
Sorry,
How do we
we're
get on?
drawing
Yeah,
pictures all over
yeah,
the place.
okay.
All right, so back to Mortgage Network.
Back
We're
to
now
the
in 91.
financing.
Yes,
Okay.
back to
Oh
financing.
my God! Yeah, financing is much more interesting than
Isn't it?
best dressed, right?
Yes. So 1991,
Yeah.
what do we got?
So small mortgage lending operation.
How many
Much
people?
like you guys,
6.
except you guys are bigger. Yeah,
He said 6 to start.
like 6 or 7. There was literally
So you were part of the original 7.
yeah.
Okay.
Cynthia, who was our processor, delivered newspapers in the morning for extra cash.
I love this.
Seriously.
I love
I'm not
this.
kidding you. And Adam Kroll, so David Kroll, the
Yep.
guy
He
that I
just
first
mentioned,
worked
yeah.
for,
Yep.
his son graduated at UNH, came to work for us in '92, and that's how the company grew. You know what I mean? But he, I'll never forget. He used to commute down. I got him an internship, and he'd commute down to Danvers in the summer, and he barely made enough money to pay the gas. And he made copies and went out and grabbed pizza at lunch, stuff like that.
So the company slowly grew.
We slowly grew. I mean, I remember one of the first mortgages I ever wrote. So before Mortgage Network, I actually had a little building concern of my own, because back in the late 80s, early 90s, it was hard to make a decent wage. So I was self-employed for a period of time. And then I started doing the mortgage business with Mortgage Network through my buddy Al and Bob. And one of the first mortgages I did, I remember refinancing this guy in Portland, Maine. Mm-hmm. And it was refinancing his loan from 14% to like 11.5%. Just to give you some context of, the market back then. But then we, the business just kind of took off. I mean, we had this great campaign back in the day. We would advertise in the Boston Globe on the weekends. And we advertised this program called No Points, No Closing Costs, No Kidding.
Wow.
That was our thing. No points, no closing costs, no kidding. And when we went into the office, the sales guys, we went into the office and fielded phone calls. And that's how we all built our business a little bit,
Giving loans away. Got it.
No.
Real capitalist you guys are.
The business owner was counting, and he's like, so you guys worked for free. That sounds great.
Yeah, I'm sure we would be busy if we offer that one, too.
We'd have no employees.
Well, that was back in the day before a lot of the CFPB and regulations that have driven the cost up.
That's why we have all the regulations now.
No,
the cost of a loan, the actual cost of a loan has gone up so much.
So dramatically. I mean, it sounds good, and I'll editorialize, it sounds good for the consumer, and it's important to protect the consumer, but it's being paid by the consumer, and it's really, it's made it a lot cost prohibitive for a lot of cases.
I think the average cost of a loan is about $11,000.
Yeah.
I think that's like the average cost of what it costs to produce. But, listen, that's all of this. It's the exact same thing. They talk about, everybody that talks about protecting a consumer, go to your local municipality and find out how much the new construction costs are, new housing costs are. The amount of people that have their hand held out in order to get money anytime, like if you're a builder and you want to build a house, the reason it costs so much money is all the junk fees. Yep. And so the CFPB is now talking about coming after what we call our junk fees, title fees. They want to go after everybody. Well, go after your own damn governments, the municipalities and everybody else. No, because listen, if we want to regulate everybody, let's regulate everybody. You're going to have nobody left.
Right.
Let's do this.
Yes.
Well, they started regulating
pisses me off because it is
the mortgage industry heavily, and and there was a need for that. But I was like, well, what about car dealers, car loans? Those aren't regulated to the extent that we are.
Well, even like pharmaceutical, I know there's a lot of
credit cards. People have debt. The debt is exacerbated because credit card rates are 29-30%.
Oh, I know.
Right? Okay.
Right.
So if that's allowed to happen, why is it? You can't pick and choose who you want to regulate and who you don't. Either let it be pure capitalism and everything will work itself out, or regulate the crap out of everybody, but not this pick and choose the mortgage guys like we did something.
That's right.
Right?
You guys feel picked on.
Of course we're picked on.
Some of us
it's not us, it's
did
the
legitimate business for a long time, but it's always the ones that
that got everybody in trouble.
Dirtied up the business. But that's,
all right,
we survived.
So Mortgage Network, rant over. Mortgage Network. So we go on, and now we're into...
So Mortgage Network, yeah. So we, through the 90s, we were doing good business. We only did A-paper business. I mean, back then. The reason why we survived the
crash,
mortgage implosion of 2008, 2009 is we didn't do stated income.
So that was, back then, that was called subprime. So you guys avoided all of the subprime mortgages.
Yes.
All right. So, and you weren't even doing non-QM. So our careers overlap. When I moved to Florida in 2005.
And where did you start?
And I started in subprime in this building.
You did,
but I did
upstairs.
I did subprime for 3 years, and then I went to A-paper, and my career ever since has been A-paper.
Yeah.
But talk about some of the cycles, right? So right now we're starting to see a refinance cycle as rates are coming down. Tomorrow, the Fed is going to announce a rate cut, which is going to be 1/4 point to 1/2 point. Little gift I negotiated on my birthday for everybody. But and then after that. But we're going to go back down. And we were talking this morning about that the cycles is usually about 10 years. So in theory, we're at the start of another 10-year cycle. We've just survived a really crappy 2.5 years. Mm-hmm. And now coming out of that, hopefully things should be really good for us in the housing sector.
I'm very excited.
We're excited. I mean, we're already seeing a huge pickup just in the 0.5% drop that it's occurred over the last 6 weeks. But the challenge is going to be, at least in my market, and I think down here too, is just cost of housing. Yeah. Usually when rates go up, housing prices theoretically should drop.
But it didn't happen.
It didn't happen. I mean, my market is Portsmouth, New Hampshire, Seacoast, New Hampshire, Seacoast, Maine. And it's just pricing, your average consumer out of the market. So much so the service industry is suffering.
Yep.
Tell them about a little bit about some of the stories. So some of the stuff that's happening, even when it stopped happening here. So when rates were really low, yes, we would have 30 people making offers on an open house, and the prices were driving up very quickly. But the market went up when things started to slow down in the last couple of years. That kind of went away here. Mm-hmm. You weren't seeing anyone removing contingencies. You weren't seeing people offering over list price for the most part. Mm-hmm. All of those things happened. In this market here in South Florida, your market was very different. Tell us about that.
Yeah, so I've got a great story, I think. I mean, 2023 was a very challenging market, as well as rates had gone up, and we just didn't have a lot of inventory on the market. But this year, it's continued. And I have a great story about a client of mine, and this buddy of mine, Daryl, my age. We've done lots of mortgages together, successful builder. I'm financing one of his daughters. I actually financed the other one too, but I financed one of them. And I think they made an offer on a house in April or May of this past year. And I said to my buddy, Daryl, I said, look, they'd already struck out on 2 or 3 houses. I said, you're going to have to make a cash offer, because he could verify his assets. His kids couldn't, because his daughter's a nurse, right, and the husband is a policeman in a local municipality. So I said, Daryl, you're going to have to make a, cash offer, and it's up to you if you want to do a home inspection. But he agreed, and we don't need to do that. I'm a builder. I can inspect the house. So they go out. $805 is the asking price in Hampton, New Hampshire, which is 10 minutes from Portsmouth, right on the ocean community. This is not an oceanfront property for $805, 45 minutes north of Boston. $805 makes an offer of $880, cash, no contingencies. 28 offers on the property.
In 2023, in this year?
This 2024.
Last year.
2024, in April.
4 or 5 months ago. 28 offers. Offered $880, $75,000 over asking price. They were one of the top 3. Didn't get it. Somebody else came in and topped that offer. Wow. Crazy. That's how crazy it is. 28 offers. They eventually did buy a house, but it was the same thing, but it wasn't as hotly contested. But that just speaks to the market that we've been. Are
you having issues with appraisals then, with people offering so much more, or people waiving appraisal? That's a really
good question, because you would honestly think. I'm just teeing it up for you, just like I always have. When we played basketball, I had to pass it to him, except he wasn't a very good shooter.
I wasn't a very good shooter when I was young.
But he was a good
worked
rebounder.
Out too much.
Yeah, actually, it was the other way around. He got the ball.
Yeah.
Pass it off. Anyway. What was the question now?
What was your great question?
I don't know. I'm a lot younger, so I don't have these memory issues. But the way that it worked was
the appraisals.
Waiving appraisal.
I'm the youngest in the room. I'll keep track of everything. Okay. Don't you guys worry?
No, surprisingly, we really haven't seen too many issues with appraisals, which is baffling because property values have gone up so dramatically. I mean, they were going up, during COVID, and now they've continued going up, and we have really seen very little issues.
You had a shortage of appraisers in Maine. I remember doing a transaction.
God, yeah.
I had to get the they were trying to tell me 30 days, and I said, absolutely not. I go, how much is it going to take? Right? Where this is South Florida. Money, hey, this is South Florida. This is how it works. Money moves things. I called
Absolutely
them.
not. How
for
much money to pay you?
$2,000. We had the appraisal back within a week.
Yeah.
And, the client paid it. They knew what, obviously I explained what was going on, but like 30 days is ridiculous.
Yeah, especially during COVID, we had lots of issues with getting appraisals done on a timely basis. Well, Maine's being a rural state, also it's very...
Do they hand count the votes up there too?
Probably don't have any problems with cheating.
We won't be voting for your man.
I know you won't. Mr. Independent.
We have to keep you home that day.
That's right. But they actually, yeah. So Maine is also very tough on appraisers. Yeah. So we're a lot of appraisers from New Hampshire, right on the border. They don't really even want to go into Maine to appraisal. But it's a rural state. You know what I mean? There's a lot of land. It's rural, so it's very difficult to get things done timely there for sure.
Talk about the competition. So there's obviously, it's a substantially less populated area than where I live down here. You've been doing it a really long time. I know you've got a great reputation. So, but how does that work when you build out in the community? Are there younger people that are getting into this industry? Like the mortgage industry is a common thing that people always say, nobody went to college thinking they were going to get into the mortgage industry. Right. And you kind of stumble upon it.
Right.
No, it's true. It's true. So you think about it and you're like, all right, well, and so actually everyone thinks that, I followed in your footsteps, but did you teach me anything in the mortgage industry to start?
All I remember is you being interviewed by somebody. And you said, and they asked you, well, how did you get into it? And you said you liked the lifestyle that my dad had.
This is very true.
But he says that a lot.
No, this is very true. What I liked is, so what I really appreciated was that when, so I remember vividly, you would go to all the games, and if you couldn't go to the games, I'd get like $20 to get like dinner or something. But in general, the point was, that was a lot of money back then.
You could be there. I think that's
the point is the flexibility, right? So
I loved being there.
just
you were
like
my son.
Just like we're able to do this.
But a person who has maybe like a job that they have to be at a desk, they don't have the flexibility to go. Whereas if you needed to, you could go basketball, watch him sing the opera, watch him at the spelling bee.
But we do that. We do that with our employees.
I don't remember the spelling bee, although he talks about it.
This is
and I
sixth grade.
definitely don't remember the opera.
No. Opera didn't sing. She got to see it. Anyways, different story.
You're talented, but not that talented.
This is true. This is very true, by the way. So, all right. So,
yeah. So, how did we get on this topic?
I don't know.
Yeah. It was a good career because there's flexibility, and it's like a lot of people in our industry now. When times have gotten tough, I don't know if it's true down here, but up in my area, a lot of them have gone to work for banks because banks would hire and I'm like, I just couldn't imagine doing that. You know what I mean? I like the flexibility. But then again, you got to be ready at night or weekends to handle your
You don't have bank
client.
hours.
You don't have bank hours, but that's okay.
I'd trade flexibility for bank
Me
hours
too.
for sure. And
Absolutely.
work late or
Yeah.
weekends or whenever the phone rings.
Well, and I'm going to the football game and I'm picking up some deals. I used to say back in the, I guess it was maybe the late 90s when rates had come down. Maybe I've got the dates wrong, but anyway, I'd play golf, and I would say every time I play golf, I'm going to write a mortgage. And I'm not pushing it on someone. What do you do?
Keep playing golf.
That's right.
That's like us on vacation. Every time you say, "Hey, you're going on vacation," all of a sudden, every agent is calling you.
Go on vacation more.
No, it just always happens, right? Get more deals. I think the flexibility is important. I think as an employer, we try to be pretty flexible with people's, lifestyles and parenting issues.
I would 100%
like
agree.
I think it's important that I I don't care to count about an hour or two or somebody being late. Just work your butt off when I need you to work your butt off, and everything works out.
You got to be
fine.
self-motivated. It's not for everybody.
It is absolutely not. I think that's a big problem, though, because I think people that go to do things that are self-motivating, agents, loan officers, they kind of go, I can be my own boss. I can make my own schedule. This is going to be amazing. I can work whenever I want. And then they go, wait a minute, if I don't work really hard and I don't work some of the hours that I never thought I'd work, I'm never going to make $1.
Right.
And then it becomes, some people go, maybe I don't mind the boxed in, 9 to 5, show up at the office, collect my paycheck, be done with it, never have to think about it again.
It's not for everybody.
It's not, absolutely not.
But I will say that, and I was just thinking as we're talking here, Mortgage Network was such a great company to work for. I mean, I worked there for 30 years, and there are guys and women like me that worked there 20 or 30 years. We stayed together. I mean,
That's awesome.
And we've done a lot of business over the years, and certainly could have gone other places, but we just had a great operation. And it's really like what you guys are doing here. And that's what I like about what you're doing is you've got a team, a core that like to be together, like to work together.
We do.
And that's so important. And, it's the culture.
Yeah.
We
We like each other.
Agreed. Culture is very, very important.
And we care.
You got to have leadership like you guys that really want to foster that. I said, yeah, exactly. I saw the picture, got a couple of knucklehead sport guys and a beautiful, smart woman.
Culture is always really important. And I think that, what it was really funny. I literally earlier today, a couple hours ago, I was speaking to a real estate agent. And, what I think people don't really understand on the real estate side is they don't really understand the different mechanisms that a mortgage company can be set up, where you have a mortgage broker, like what is an actual broker,
right.
And, they've got their little world and they think brokers are better. And then on the same token, then you have the I'm a direct lender, but they don't have underwriting. So, you're not really a direct lender. You're a glorified broker. And then you have true direct lenders, which is what we are. But then I'm sure the banker says, yeah, but you're not really a banker. You're not servicing, or you're not a depository institution. So there's really like 4 different options there.
But you're a specialist.
What we are. And so I don't know. Obviously I would like the idea of and in our game plan is to go after to purchase an FDIC at some point. But part of that is only just to have access to the 50 states. I also don't know the cons to it. I don't know what type of regulatory oversight you're bringing in. And I'm just announced I don't like a ton of regulations, so I want to be careful. Don't ask. What one hand sounds really cool. I'll just go get licensed in all 50 states if I rather do that.
Right.
But I don't want the same oversight. So we'll see. But it is very interesting because they don't know the difference, and the real estate agents, and I don't think consumers do either. But
Absolutely
there is
not.
a major difference on how we do business.
What was the conversation with the agent, though? What was she asking, or he?
So I was just discussing with her. She works for a big team here, Lori Reeder's team, and I was discussing with her. And I know a loan officer who owns a mortgage brokerage that does a lot of transactions with them. And so I just said, hey, do you know Joey? And she said, yes. And I was just explaining, I said, he's a really nice guy. We used to work together. And I said, here's just the difference between how he does business and how I do business. And just in a polite, positive way.
Just to inform her.
Just informing. So part of our pitch, whenever we bring a realtor in the office or whenever we bring a loan officer in the office, I want you to see that our underwriting manager sits right across from me. Right. Our CO is Jared, my business partner, and then myself. And in fact, to give you an example of what I love about being a direct lender, we just had a loan officer who had a transaction that our underwriting manager didn't agree with a particular income. She sent it to our QC, who's also an underwriting manager. Mm-hmm. She agreed with the underwriter. Jared and I disagreed, and we went, no, we're signing the loan and we're closing the loan the way that it's supposed to. And that's the advantage of having owners who are in sales with you, mm-hmm. right? I'm not going to take needless risk on. That's stupid too. But at the same token, if something makes sense and if we think we can fight it, we will.
You could defend it.
Better word, defend. Yeah.
You made a lending decision.
This is why.
Yeah, I agreed.
This is legit.
Well, that's what's fun. This is what I love about being self-employed. I don't like being told what to do, but I can play within a framework.
Yeah.
Like outline the box, but I don't really want to be told what to do. So this allows me to kind of do a little bit of all of that.
Yeah, because at the end of the day, we've all been doing it long enough. We know that Fannie Mae and Freddie Mac, for instance, they give you guidelines. Mm-hmm. That's really what they are. But a lot of the industry underwriters, and I'm not just picking on underwriters because there's a lot of really good ones, but they look at it as the gospel, and it's not necessarily the gospel. It's a guideline.
Right. All right, so let's talk about this because this is one area. So although nurture, we're very similar in many aspects, but I'm an entrepreneur. You're not. You've always
he has a way with words, doesn't he?
I'm very eloquent with words, don't you think? I'm just direct. No, but you've always, let's call it for what it is. You've played it safe most of your career. You prefer the safetiness.
Part of it is I was bringing up a son.
That's stopped in 96, by the way. So.
Things change when you have a family because you're not just thinking about
then I
self.
was married. And that plays into it sometimes.
Uh-huh.
I get it, but I'm just saying in general, I think most of your career, is my characterization of your career not correct or accurate? You've played it mostly safe as opposed to, listen, you work for someone your entire life. You could have started a company.
Let's just add to that. The last job I had a guarantee paycheck was in probably 1988.
So still not playing it safe.
It's not that safe. So anyway, I get it. No, you were an entrepreneur. I'm very proud of what you've done. And
I'm a risk taker. I'm a gambler.
You've expanded on. You've expanded on.
And I took a risk and a gamble at the absolute worst time possible. But
sometimes that's the best time to do it. It is in a lot of ways.
Well, listen, if we could survive
the things right.
Not just that, if you can survive the tough times. The worst part wasn't the money. I don't care about the money. You can always make money up again. The worst part was, and I've said this before, I don't mind firing people. Firing people is really easy because if you're firing someone, it's because they deserved it. But I've had people that we had to lay off.
Let go.
Yeah,
that we had to let go because I wasn't delivering enough revenue in through loans. And like, that sucked. Yeah. People crying in your office. Like, it's probably the worst thing I've had to do from a business standpoint. Like, I don't mind taking a back seat. I don't mind losing money. I don't mind doing all these other things. Like, all of that's rebuildable.
I know the guys when I was at Mortgage Network, we went through some cycles where we had to lay off a few people, and it was always very hard on them because some of these people have been with the company 10, 15, 18 years, and they would hold off as long as absolutely possible because
I think
of that,
we did. I think we did that. And we didn't have the longevity of the 18 years, but the people that we had when we, came over and it was just tough were people that we felt like they were in this with us.
Right.
So it was very tough and not great at all. It was hard.
I remember when I started coaching with my old coaching group in like 2018, and I remember like the main guy, and obviously I don't want to like say anything negative about him because I've learned so much from him. But at the same token, I remember he would talk about how like they would hire and fire constantly with the ebbs and flows of the business. And I was like, what a awful culture to as an employee that you might be getting fired at any point in time. Like, why would you work so hard for someone? Like, I could never build a company.
Our business, our industry is a hard industry, I think, to manage in a lot of ways because with so many things beyond our control.
Well, I also think
it could also flip it. It could, you could literally, if rates, so tomorrow, if we get a 75 basis cut rate, and our rates go to 5.75, 5.5. Like we're not leaving. Everyone's going to be calling that entire database. Like we're going to get insanely slammed. And then a month later, something happens and the rates go up. Now, like you slow down again. Like, so it's really hard to time it. And I think one of the tough things we did when we came over, when we started in June of 22, part of the issue was you're just waiting. It's going to come back down.
Yep.
It's going to come back down.
Let's
so
keep
you're
holding
carrying
out.
this massive like workforce. And then you're like, like it's been 3 months in a row. We're hemorrhaging cash, very quickly. Like this, we can't keep doing it this way.
And it's hard to stay motivated too.
Oh,
I mean, every day you got to get out of bed and say, somehow I got to find a deal.
Right. I'm going to go up against everything today and just be denied.
So talk about that. So mindset's really important. What do old guys like you, or what do you have to look forward to? I'm just kidding. But no. So,
Actually, I live in a beautiful, beautiful place in the world. I live on the coast of Maine, a half mile to the beach. And literally I would have to, and it gets cold there in the winter. And
not
I
a lot.
Literally have to
nothing to do.
I'd get up and I would take a drive down to the beach and just, sometimes just walking along the beach and smelling the fresh air is what I needed to keep my head together.
Yeah, I bet.
But talk about,
it was tough.
But go mindset for a
Plus,
second.
what's that?
I want to know. All right, you need to pick up a deal tomorrow. How are you getting a deal?
You gotta stay in touch with your database.
Okay, so you're picking up the phone.
Oh, here we go.
Phone. Yeah. So over the years, I mean,
how many dials you make?
Because
in a
you've
day?
already. What's that again?
How many dials you making in a day?
Isn't he
Tell the
so
audience
special?
how hard you work.
I'm gonna tell you something. I've made a lot of calls over my career.
I bet.
And it's hard to keep it up, but that's the best thing you can do.
So what you're saying is now you're waiting on the handout.
That's not what he's saying.
You're waiting for the client to call you back, nice and soft.
Yeah.
This is what's happened to the loan officers of today, by the
You
way.
are a loan officer of today.
I'm not like that. I'm not like that. Look, you can look at our CRM. I think other than Amir, I make more dials than anybody else. Yes, it's true. Your numbers are way down too, by the way.
I'm trying to think of the famous quote, but it's about being in the arena. You just have to survive. You have to, you stay in the arena. You got to stay in the game.
You can't check out.
So that's defensive.
And it goes. He's loving this.
He's so
because you're setting up my point.
No,
you're
but
sitting defensive, and
what
I'm on
he
the
wants
attack.
to say is how to be proactive, how to not be on the defensive, how to stay in the game,
not stay in the game, how to win the game.
No, the best thing I can do when I really need to pick up some business is I'm calling some agents. I'm getting in front of them.
Yeah.
Because it's tougher to make the call to get in front of them than getting in front of them.
Yep.
I don't mind getting in front of them. It's like asking for it, but you got to do it. And a lot of people don't like rejection. Mm-hmm. Nobody likes rejection.
Emmanuel
Guess what? You're going to get rejected.
No.
He has never been rejected except from. I won't go there. We're not supposed to talk about his love life.
I don't like rejection. I've never had. I've talked about it before. There's a good book that I think it's called Fear of Rejection or something like that. But call reluctance is an issue, and I think that part of it is it's not having a value, a message of value, or a call that is beyond asking for something. That's the problem that people have with dialing. If you were calling to say, I wanted to call you and give you $100 for free, where do I send you this gift card? You'd have no problem making that call.
Because you're asking for something.
Well, because you're giving something.
No, but in your case, what you're saying is you're asking.
If you mentally think you are calling to ask for something,
you don't want to call.
That's the difference. So psychologically, you have to tell yourself, and you have to create the script that says, I am calling to add value to your life.
Providing value, exactly.
I'm calling because I have this. I'm calling a real estate agent. I wanted to give you a new script. So for example, the script that I've been telling agents is call your clients. tell them the Fed is going to cut rates tomorrow. This is a wonderful thing. Your value is going to go up. By the way, as your value is going up and you're really happy with this purchase I made for you, is there anybody you know that's looking to buy or sell that I might be able to assist? You ask for a referral, but you're giving them good news first, right? We do the same thing. You're calling a real estate agent. I'm telling the agent, use this script. This will work for you.
By the way,
I'm adding value. By the way, do you have anyone that I can help you make best use of your time that I can get pre-approved today? Right? So if you have a reason, if you have but that's the
provide value, then
you got to provide value.
Then ask for the business.
Give, then ask. Yeah, and I think that's the problem, because we all go into it, say, no, I'm calling you because I can save you $200 a month on a refinance. But you don't want to do it. You don't have to, but.
I think there's a bigger difference, though, with certain people that when they're in the transaction and they're actually they have the client, they have the agent that they're working with, they failed to build a relationship with them in that moment during the transaction. They leave it very transactional. So when the transaction is over, there was no relationship that was developed. And it's hard to even have that call where you're adding value, because it's almost like I shouldn't be the one doing it. And I think that might be a point of, not attack, but just a point that, to highlight is when you actually have the people that you're working with them, make sure that you're reaching out and building that relationship with them. That way they know who you are, they feel comfortable with you, and you have that rapport with them. Because I don't know that everybody does that naturally, if I'm being honest.
So you're talking about an LO in process on a loan. So if they just simply would dial once a week and call the agents and give them a weekly update. Is that what we're referring to?
I understand.
So if there was a system built in place, and if someone even gave them a script, do you think an LO might be able to do it?
I don't think so, actually.
Because it's too easy.
I think
it's too easy to follow instructions.
I think they get very kind of boxed into the process of the transaction and getting the loan closed, and they forget that there's humans. And I'm not saying anybody in general here. I'm just saying in life, they forget that there's a relationship that could be had there, and they kind of bypass it. And so when it's over, yes, it's closed. Everybody's happy. Everybody goes on their way. But I don't think that they ever thought, I might need to call this person again. I would like to call this person again. I would like to have this person as a resource for me. Let me make sure that I set myself up for success now while I'm working with them and they need me, so that way I can have that long-term relationship with them.
It's an audition. I mean, I think those are the easiest calls there is. It's an audition because I'm going to want your business in the future.
Right.
Let me show you how I communicate. Let me show you how good I am.
But not everybody's an entrepreneur. Not everybody is super successful. Not everybody thinks.
Only one person in this room apparently is an entrepreneur.
Absolutely.
It's been defined.
No, there's two. Janine. Well, a partnership in Janine and Roy that own their own company. But
and
yes.
Emmanuel.
Emmanuel.
Sarah, you and I have just thrown to the dogs.
We're just taking the easy way out.
Let's talk technology.
I wanted to add something to what you guys were just talking about there. One of the things at Mortgage Network, and that we, or to this day, we've always tried to provide is I wanted to be a resource for my clients, not just for mortgages.
No, for everything.
But everybody, that's exactly right.
Yes.
Everybody needs a builder, a plumber, whatever. They're moving into town. They don't know anybody. That's right. I want to be the guy. I want to be the director.
Yeah.
And that's adding value to your client. And that's why they remember you.
Absolutely.
How many times have I sent, my buddy, Joe the Builder business, or,
anything,
or accountant or financial planner or whatever it is.
Yeah.
That's really important. That's really what we can do as a team. And I actually, to expand on that, I talk about clients, and I always poke fun at my sister. My sister, Sherry, is the greatest girl. She has so many friends. She's just a great girl. She's always so upbeat. Do you think I ever get any business from her? No.
Why?
Because she's not wired the same way as I am. But meanwhile, this client of mine, Brad Robinson, I always use him. He's on a plane talking to the guy next to him. Never met the guy before. The guy's calling me the next day. Brad Robinson sends me 20 customers.
Have you ever had the conversation with your sister?
Oh, I do all the time. I said, Sherry, you just told me your neighbor bought a house. Why didn't you tell them about me?
What did she say?
Lack of confidence.
I didn't think about it. She's touchy-feely. No, but anyway, it's interesting how people...
Oh, how their brains work.
Yeah, my sister could she's friendly, does everything for
maybe
everybody.
she's a little nervous you're not going to deliver
maybe
on
that's
the goods.
it. Could be it. Maybe she would refer you.
That's exactly what I was thinking. I'm going to reach out to her.
When was the last time you called your database?
She's not in my database.
She's your sphere of influence.
But yes, so all right, let's talk a little technology because when you started, computers were barely out. There were no cell phones.
So when I went to college, this is the truth. When I went to college, my computer classes in my business school was in Fortran, which is a scientific language, and you either had to reserve time in the computer room, or we actually programmed using punch cards. So if you've ever watched an old movie, punch cards, you put in they have little holes in them, and then you take the cards. They have to be in order, because if they're not in order, it screws up your program. And you give it to the computer person, and they run the program.
The computer.
Yeah, that's how.
By the way,
that's my.
I didn't even have a laptop when I started college either. Like it wasn't. They weren't that prevalent.
I had a computer in my.
We had to go to the computer room.
Yeah,
I had to do the same thing.
That's how this is.
God, I think it was ancient.
Yeah,
and AI is going to remove most people soon. Very soon.
We're good. I'm retiring soon, hopefully.
Right. Make sure we sign you up for our low annuity program first.
A little plug for low annuity.
Little plug for annuity. I am 30 days away from having this stupid word trademarked. Have you ever tried to trademark something?
No,
it's a
I'm not
nightmare.
an entrepreneur.
It's a fortune, and it takes forever. That makes sense. Now I get it. What was I thinking even asking that? Rhetorical. So let's talk technology.
Yeah.
Right. I think we feel the same way about technology. The idea of technology is to make life easier, but it just definitely isn't. And the more to be honest with you, I do feel that part of the escalating costs of doing a loan is because so many mortgage companies invest in so much technology.
Yeah.
So in them trying to make the process easier, they've actually elevated the cost of doing a loan through technology as opposed to saving money. Right? I mean, tell us about like some of the technology. When you started, it's obviously different.
Yeah, back in the 90s, early 2000s, I mean, we probably started using a computer for origination maybe in 2000, 2001. I had a clunky laptop.
Mortgage Network built their own operating software.
Yeah, but before that, we were doing paper applications, and it literally 30, when it was busy, 30, 40 closings a month I could do.
Paper applications.
Yeah. And now it's
forging documents left. No, just kidding.
And now it's now in a good market, it's half that number with all the technology.
Right.
Because of the business is just getting more difficult.
More competition, less competition than there used to be.
Probably. Well, we used to compete when I first started in Portsmouth. I competed against savings banks. Why would I, the customers say, well, why would I go with you? I could go to Portsmouth Savings Bank. And I'm like, well, Portsmouth Savings Bank, they may hold on to the loan. I mean, because the customer was concerned we were going to sell the mortgage. We're going to sell the servicing.
Because that was a common practice.
That's right. Portsmouth Savings Bank. Well, Portsmouth Savings Bank got bought by some other bank. They got bought by People's Heritage. They got bought by some, there's no guarantee in life. You know what I mean? So that's who we competed against, local institutions. There were major mortgage companies, but it was really the local
ones.
Yeah, yeah.
What is the agent saturation like up there? Is it the same as down here? Because down here, there's everybody is an agent. There's, I think, 43,000 agents in Broward, Palm Beach County, and St. Lucie County. That's not even including Miami-Dade. I mean... Yeah,
so I don't know the statistics, like the statistics, but I'm sure it's very similar, proportion to population.
Okay.
Because wherever there's a lot of money, what's that?
So you have like 300?
No. We got a lot of agents. I mean, I wouldn't even try to give you the number because I'd be off. But wherever there's a lot of money and real estate's happening, everybody wants a piece of it.
Because even if their sister sells their house once, they want to do the...
Yeah, there's a Keller Williams place in town. I forget when they opened up 15 years ago, whatever it was. And there's all these agents. I'm like, I don't know anybody there.
So clearly you don't do much business with them. Okay.
Sounds like you need a business development person.
I do actually, and
we got somebody in
I've got
mind.
somebody in mind too that I want you to meet.
Fantastic.
Yeah, he's fantastic. This young guy.
Let's talk about your love for Alfred Hitchcock movies and how god awful they were. I don't know why I thought of that, but it was a little memory that popped up.
You would watch with him?
No.
Weren't they scary?
Actually, the first time that we kind of met, I came over to the apartment where Emmanuel and his mom was living. And he always remembers I had Chuck Taylor sneakers on.
And he had like sweatpants. He had like blue, dirty sweatpants and like a 6-pack of beer. Like he was not an impressive.
But you liked me.
I mean, I was a little kid. I was super
me.
shy. I think I was like hiding in the stairs, and like I slowly came down.
It's true.
But
Yeah.
and then I would always go play. I didn't play.
But he liked the fact
played
that
basketball.
we'd watch John Candy or someone like that, some movie like
John
that.
Candy was the best.
Uncle Buck.
But he played a lot of basketball,
Yeah.
surprising for his height and athleticism. But
Isn't he taller than you?
no, we're the exact same height.
No,
So,
I look taller.
but he,
My shoulders aren't as wide.
Got it.
no, but we would, there's another reference to that, but no one knows that one. So, but I would go watch him play basketball, and I would just constantly shoot on the sides, and I got to know all his buddies and
You
all
would
that
think
stuff.
all the
It
shooting
was
he
just
did
fun.
on the sides, he would have been a better shooter because he had a lot of practice at it.
No, I wasn't. Shooting was not, I fully admit.
But you could box out.
But you're reasonably good at shooting because I've seen you at the gym shoot and you make a good amount.
That's because now I can't jump anymore.
Oh.
And so
It's true.
It's true. So before I was much more athletic and I could jump really high. So I wanted to go beat people up
So you're out
and
jumping
rebound.
yourself.
Yeah.
And so now that you
You got to
can't,
stay put.
now that I don't have a choice, you got to kind of learn to figure how to do it, which is why I play pickleball.
So yeah, we played basketball a lot.
Tell them about your
growing up.
pickleball game the other day.
I'll get to that, and then so when I came down last winter, we went to his gym and we played a little basketball, and we hadn't played in basketball in probably 15 or 20
Both have like a
years.
1-inch vertical now.
I know.
You guys were in bed for 2 days, sore.
I can't play. It's 3 ACLs later. It's my knees are shot.
Yeah. But
Yeah,
pickleball?
now we play pickleball. He's teaching me pickleball.
Trying to.
Yeah, it's fun.
But what's all right? So let's wrap it up.
Okay.
Let's talk about the future. So loan annuity, which is basically a retirement plan for loan officers, the concept of which
It's great idea
that you kind of inspired me to create.
because I'm an entrepreneur.
You're just
I
better
guess
at,
an entrepreneur is someone who steals someone else's ideas. Really,
it's not that you had a
probably the
base
definition.
thought, and I took your base thought and said, you had a problem. Really, is what it was.
This is his-
and then I
this is his
solved
claim
the
to
problem,
fame.
which is
He's the
what being an
problem solver.
entrepreneur is.
I got it.
Yeah.
I got it. He is.
But no, realistically, there are a lot of loan officers that are in your age range, the 60 to 80 years old. And, we were talking about this.
Closer to 60. Thank you.
It doesn't matter. It's the same age range. You know what I mean? We'll lump you in with a 78-year-old just as much. So, but realistically, there is the advantage to what we do. And one of the things that I love about it is that it's just, as long as your mind is still sharp, you don't need your, why is everyone making the assumption I'm saying his mind's not sharp?
I mean, you're talking about this group of people like they're.
As long, I mean, it's because a lot of people have to retire at a certain point, and this is not the kind of career that you have to retire from. You can't answer your phone and have a conversation for
Right,
30
right, right.
minutes, and send somebody a few links, and next thing you know, your team is handling the
Well, here's
rest
a
of
good
it.
example. David, who you know well, David, who was my mentor in business, who owned the building company, the development company that I worked for right out of college. He came to Mortgage Network in 92, 3, 4, something like that. And he is 77, 78 years old, and he's still one of the top producers in Movement Mortgage.
He
Look
does
at that.
paper apps, paper scribbles.
You did paper apps up until about a year ago.
No, it was more than a year ago.
He's just,
but so
he's the epitome of the people person, the helping out.
they call me the people person.
Do they really?
No.
No,
They call me the surgeon.
The surgeon.
I'm the people person.
Okay.
She's the
Yes, you
people
are.
person.
I'm the people person for all of us, including
Actually,
him.
Yes.
I don't know if I told you, but I was so impressed when I came down to your Christmas party at Signature and how you knew all those agents' names.
Yeah.
And I said to you, how do you do that? And you said to me, that's my job.
I walk
Really?
around.
And
I walk
I just-
around. I'm like Sarah. Like who's in the
Yeah,
green?
but no, that's impressive.
Bob.
That's
You
a
met
skill.
Bob.
You know what it is? I think, thank you. I appreciate that. A lot of it is, yes, it's my job, but I genuinely like and care about people. And so it becomes easy for me because I'm interested in getting to know them and I want to talk to them and I want to be in front of them and I want to see how we can help. I come from hospitality background. I worked in restaurants for a long time. I worked in hotels for a long time. So people has always been my business. And I happen to enjoy people for the most part, as long as they're not yelling at me. And I'm interested in people. So it becomes easy because I want to get to know them because I think there's a lot of joy in getting to know people because you hear their story and you get to know them and all of a sudden you learn something and it just, I don't know, it makes me happy to
That's great.
know people and you know, and so I care. So it becomes a little bit easier to
And that's
pay
important to
attention.
have someone on your team like Sarah. I hope you realize how lucky you are, fortunate.
Who do you think
are.
created the role?
So Emmanuel,
No, but
Come
I'm
on.
impressed because it's hard for.
You're welcome.
I like people too, but I don't like them.
Not only did I
much.
create the role, I went out and sought the best person for that role.
Oh, okay.
So technically, everything she does, I get credit
Goes back
for.
to you.
yeah.
Yes.
So when something
Doesn't it work
Somehow
well?
I thought that was
Something
probably
when
where that was
something good
going.
happens, he's like, "Yeah, I know. I knew that you would be capable of this. That's why I hired you. I'm the genius."
I empowered you to go create this amazing
And
relationship.
then when something bad happens, he's like, "This is the part of you
should
that
have
I
trained
couldn't
you on this."
control."
Oh my goodness.
we have a lot of fun.
We do.
No. it's
All right,
terrible.
last
It's
question. When's the last time you made a spinach lasagna?
He wants that tonight.
No, I have not made one in a long time. And actually now, it's funny. Whenever I cook something, it's
He
it's
sends
salmon.
me these
I cook
pictures,
sa-
by the way.
I cook baked salmon and broil it at the end with a dill sauce,
Okay.
with broccoli, and either potatoes or rice. And it's
Salmon's
my go-to.
the easiest thing because
Yeah,
it's
but
the easiest thing in
but
the world
it's
to cook.
healthy. It's
You
good
know,
for
he
you.
tried doing
You
this
look
whole.
like you eat healthy all the time.
He does look like he eats healthy. He looks
Well,
great.
Mr. Salmon over there.
Yeah, well, that brownie you ate at lunch,
I still haven't had it. It's on the desk.
I ate my half.
But are you a good cook?
No, but I enjoy cooking.
Okay,
It's
that's all that matters.
You know, you
remember the
need
food
to
being-
cook for somebody. You know what I mean?
Right.
Yeah, I get that.
You know what I mean?
I don't remember.
No, he cooks for himself and he loves it.
I know. I see it
Yeah.
on Instagram.
No, I do love cooking. It's just relaxing for me.
Yeah.
But I do remember the spinach lasagna. That was something that you
Did you like
very
it?
well.
Really?
And then
He didn't
I
answer the
still
question
have
yet.
Allie's his ex-wife. I still use her chicken finger recipe,
I know
which
which one you
is
mean.
to die for. I'm gonna,
Joni's chicken. It was called.
well, we don't call it that here, but so you gotta steal this. This is the best.
Mm-hmm.
You take Ritz crackers,
Yeah.
and you crumple them up, and then so you take your chicken tenders and
Wait a
you
minute.
dip
You
them.
add butter to it too. Don't forget that.
Hey,
Okay, sorry.
chef's
You're the
talking
chef.
here. The answer is yes, chef. So you take the chicken tenders and then you dip them in melted butter,
Okay.
and then you roll them in the Ritz cracker, and then you bake it.
Why haven't you made that for
I
us?
have made it, and everybody I've made it for is like incredibly
You have an
impressed.
You
Full
got to
of
have
people that
cranberry
love
sauce
you.
too with it.
No,
Oh,
cranberry
is great.
sauce.
You know that Ritz crackers are banned in Europe? I just did a podcast yesterday.
Why?
Really?
Because there's
Why?
something really horrible in them?
Yes.
Oh, that's why
Don't
it's so
ruin
good.
my life.
I'm going on the carnivore diet.
They're banned in Europe, but cigarettes are encouraged, right?
And vodka.
Vodka.
And wine.
Awesome. Well, Dad, thank you so much for being on the show.
Thanks for having
It's
me
been
on.
a
This
pleasure
is
to
fun.
roast you. We're hopefully you'll come back soon. A little,
can do a
little
show
smarter,
together.
a little
Yeah, that's
younger,
right. We get right
a few pounds less.
Yeah.
No, I'm just kidding.
We loved having you.
Yes.
Thank you.
Thanks for being on, Dad.
Okay, that's enough whining for one day. We are so happy that you could join us today on Stop Whining About Real Estate. So please, not only listen, but subscribe, follow us, download, share, and if you're feeling it, Give us a 5-star review. Hey, and if you'd like to be a guest on the show, please email stopwhining@choicemortgage.com. Thanks so much.